Why perfect trading plans still don't get executed. Have you ever built a perfect trading plan? Entries, exits, risk management, 3 different contingency scenarios, all mapped out in a spreadsheet that looks like a work of art? And then you completely ignored it the moment the market went live. Not because you're reckless, not because you didn't know what to do, but because in that moment, the plan suddenly felt wrong. This is one of the most frustrating experiences in trading. You don't lose money because you're a bad analyst. You lose money because when real price starts moving, the version of you that built the plan disappears. There's a massive gap between the calm, logical trader who plans on the weekend and the emotional, reactive trader who has to execute on Monday morning. And almost nobody talks about why that gap exists. Most traders think execution problems mean they lack discipline. They think they need more willpower, more motivation, more self-control. But that's not the real problem. The real problem is that your brain does not experience the market the same way it experiences a spreadsheet. When you spend hours analyzing a market, marking levels, studying structure, imagining scenarios, you develop an emotional attachment to the outcome. Even if you don't realize it, somewhere in the background, your brain starts thinking, I worked hard on this should work. And that's where the illusion begins. You mistake a detailed plan for a guarantee of market behavior. You plan a clean long entry at 50, stop at 48, everything is textbook. Then price drops to 48.10. It stalls, it hovers. Suddenly, your brain lights up. This is just a stop hunt. It's shaking the tree. If I get stopped out here, I'll miss the move I knew was coming. So you move the stop to 47, then 46. At that point, you're not managing risk anymore. You're protecting your ego's need to be right about the $50 idea. And this is where most traders don't realize the plan already died. A trading plan is not a map of what the market will do. It's a map of what you will do. The moment you try to control price, instead of your reaction to price, the plan becomes irrelevant. But it gets worse, because even if you want to follow the plan, biology often overrides logic. Your trading plan was built by your prefrontal cortex, the slow, rational, human part of your brain. But execution happens under pressure, and pressure activates the amygdala, the survival system. When real money is on the line, your brain doesn't interpret a red candle as data. It interprets it as danger. Heart rate increases, breathing changes, your body prepares to either fight or run. In flight mode, you cut winners early because you're terrified the profit will disappear. In fight mode, you revenge trade because it feels unacceptable to let the market take something from you. None of this is a discipline problem. It's a biological one. A trading plan that ignores how you feel under stress is like a diet that ignores hunger. It might look great on paper, but it won't survive contact with reality. If your plan doesn't include instructions for moments of panic, hesitation, or frustration, you don't actually have an execution strategy. You have a wish list. This is why traders say things like, I know exactly what I should do, I just don't do it. And then there's the third silent killer, complexity. Most trading plans are far too complex to survive fast markets. 5 confirmations, multiple indicators, conditions stacked on top of conditions. RSI must be oversold. Price must hit a Fibonacci level. The 200-day moving average must hold. The dollar index must be dropping. Volume must confirm. Then news hits. Price moves 2% in seconds. Your brain tries to process everything at once, but it can't. You hesitate. 3 seconds pass. 5 seconds. By the time you click buy, the risk to reward is gone. Now you're frustrated. So you chase the trade late, or you skip it and watch price explode without you. Either way, you break your rules. Here's the uncomfortable truth. Complexity is usually a mask for insecurity. We add more indicators because we're afraid of being wrong. But in execution, clarity is king. If a 10-year-old can't understand your entry trigger, you won't follow it when the market gets volatile. And this is why even traders with excellent strategies struggle more than beginners. Because the better your plan gets, the obvious your execution flaws become. You know what to do, you just don't do it consistently. That gap hurts, but that gap is the real work. The market doesn't reward beautiful analysis, it rewards consistent behavior under uncertainty. So the solution isn't building more perfect plans, it's building plans that are followable on your worst psychological day. That means fewer decisions, not more. Less optionality, more boredom. If you need more than 3 reasons to take a trade, you're probably overanalyzing. Your plan should also tell you what to do when emotions show up. Not stay disciplined, actual instructions. If you feel the urge to move your stop, step away from the screen for 10 minutes. If price enters your stress zone, stand up, change posture, drink water. Physical actions interrupt emotional spirals. And every plan needs a red scenario. Not just a stop loss, but a plan for the rest of the day if you're wrong. What you'll do after a loss. How you'll avoid revenge trading. How you'll reset. Because execution fails in the trade. It fails after the first emotional hit. Here's the irony most traders miss. A plan doesn't work because it's perfect. It works because it's executed imperfectly but repeatedly. Execution is its own skill. You don't fix it by tweaking rules. You fix it by designing a system that respects how your brain actually works. The market doesn't care how smart you are on the weekend. It pays you for who you are when price starts moving. So stop trying to be a genius in analysis and start training yourself to be boring, calm, and consistent in execution. That's where the edge really lives.